So as the Trump administration continues to pressure Seoul and other trading partners, South Korean goods will be hit with 25% tariffs starting August 1st if the government fails to reach a trade agreement. For more on what to expect, we're joined by Professor Lee Yoonsoo, Professor of Economics at Sogang University. Professor Lee, thanks for joining us this morning.
Good morning. Thank you for having me.
So how much impact will the 25% reciprocal tariffs have on the Korean economy?
The 25% tariffs as written in the letter by President Trump will likely have a major negative impact on the Korean economy. First, Korea is one of the most export-dependent countries in the world. Exports make up over 40% of its GDP, and the United States is Korea's second largest trading partner. We are already seeing signs of stress. Exports to the U.S. dropped by over 8% in May compared to a year ago, and Korean GDP in the first quarter of this year declined year-on-year basis for the first time since the pandemic. The Bank of Korea has already cut its 2025 growth forecast just 0.8%. This reflects the expected damage from the tariffs. And the IMF also downgraded Korea's outlook because of the major external shock. If these tariffs remain in place, we'll likely see a very sharp slowdown in the second half of the year, especially in industries like automobile, electronics, and machinery. These are key to Korea's exports. So these tariffs will not only hurt trade, but also weaken the business confidence and investment sentiment. That's what we worried.
Right, you just mentioned the automobile industry, and it seems the auto and steel industries will likely be the hardest hit, and major steel producers in Korea have already seen a decline in revenue in the second quarter. How should these challenges be addressed?
So, as you just mentioned, auto steel are among the hardest hit. So in response, automakers are expanding U.S. production, especially for electronic vehicles, to bypass tariffs and protect market share. And they are also diversifying export to regions like Southeast Asia and Europe, and focus on high-value products where demand is more stable. Steel makers are also restructuring global assets, exiting unprofitable operations and exploring joint ventures in the U.S. The problem is that increasing local production in the U.S. may be a smart strategy for Hyundai and Kia and steelmakers because this will avoid tariffs and maintain sales. But from a national perspective, it's not entirely positive because this means less production and fewer jobs in Korea and more technology and capital flowing abroad. So while the firms may benefit, the Korean economy could face hollowing out risk over time. This is why policymakers are negotiating very hard. At the policy level, Korea is pushing for tariff relief through the diplomatic channels, and they also review trade remedies against low-cost imports.
Right, that sounds very concerning. And what might a possible trade agreement look like? What's the minimum Korea must secure in the trade agreement to sort of minimize the impact of tariffs?
So a possible trade deal would likely include targeted exemptions or tariff reduction. So the lower rate is very important, especially for autos and steel makers, because these are the most exposed sectors. One option is a tariff rate quota, where a limited volume of exports enters the U.S. at the lower rate of tariff or zero tariffs. This model already exists for steel with some other countries. Korea should also push for exemptions on key items like electronic vehicles, batteries, and auto parts. These are critical to U.S. supply chains. The minimum goal, if you ask, is to protect core export industry and give companies time to adjust. Even a very partial deal, such as a lower rate in certain sectors, could reduce the shock and keep supply chains stable.
I see. And unseasonably high temperatures in Korea are pushing up food prices right now, especially for fruits and vegetables. The price of a single watermelon is almost 30,000 Korean won. What measures do you think the government will have to take to tame inflation?
Yes, food inflation is becoming a real concern, especially with fruit and vegetable prices soaring due to extreme heat. A watermelon price now costs over $20. That's a big shock for many households, including my family last weekend. And in the short term, the government may release public stockpiles or reduce import tariffs on key items. And they may offer targeted subsidies to stabilize supply. But this is also a climate issue. If extreme weather becomes more frequent, we'll need longer-term investments in agricultural technology, such as smart farming and climate-resistant crops. That's a big investment for the agricultural sector, I think. Food inflation hits low and middle-income families the hardest. So prices must also include temporary support for these vulnerable groups. Overall, this is not just about the short-term price controls, it's about building resilience in the food system to deal with future climate shocks.
Right, I guess it's now up for the government to tame those inflation. All right, Professor Lee, thank you so much for your insight today. We appreciate it.
Thank you very much.